Shall we start? So, first of all, good afternoon. Just to recap of what we did last week, I have uploaded a question. Okay, I have uploaded that already. So, yeah, you can see. So this is the question, right? So this covers the area that we studied in our first class. Okay. So I want you all to go through this, and I will give you a few minutes for you to figure out the answers to this. So you will get this kind of questions. So you need to know how to tackle it. You have all the notes and everything. So just in point form, put your thoughts into this. Okay. So this question is about, you have recently joined the board of directors at TechWave Inc., a rapidly growing technology company. During a board meeting, you noticed some concerning practices regarding the company's decision-making process and overall governance structure. The CEO has a dominant influence over the board, and there's a lack of transparency in financial reporting. Additionally, the company has been actively engaging with its shareholders or addressing. Additionally, the company has not been, Additionally, the company has not been actively engaging with shareholders or addressing their concerns. So this is a simple scenario of the governance behavior of this organization. We take on some. Okay. A very simple one. So you are on the here you have to answer from the point of view of a board member who have recently joined for this company, right? So you can see that at present how they do the stuff, right? So you are a new member who have joined the board, and in your board meeting you have noticed certain things. Now based on those things, you have to answer these 5 questions. So first one is, why is corporate governance important for TechWave? Why is corporate governance? දැන් මගේ මූල දිහා බලන් හිටියේ කියලා උත්තර නම් එන්නේ නැහැ. Either you have to download the last video. Okay, so otherwise you have to do some Google browsing. Okay, so unless you have the mic mute. Right. Now, in your tute that you have, I don't have the tute with me. So, why is corporate governance important? So, when you take your tute, which part of your tute is giving the answer to that? Now, we did the introduction to corporate governance, risk management, and ethics. So, in that tute, you have slides. One slide is supporting you to answer this question. And anyone say? Last slide, exactly. The last slide talks about why corporate governance. That's what the topic is. Importance of corporate governance. So you can use the points of that last slide. Customize the customize make a company make points highlight it has someone said it says a couple of 5 points. These 5 points you can use to highlight the importance of having corporate governance for this organization. Right? Importance of having corporate governance. So those 5 points can be put as an answer for that section. Clear on that? Right. Second question. What potential risk could arise from current governance practice at TechWave? For that, you have to read the scenario, right? By reading the scenario, according to what we went through last week, what sort of things can you notice in this compare? Lack of financial transparency. Good. What else?
Dominance.
CEO dominance can be seen. Right? Those are the things that you can see very clearly. CEO dominance can be seen. Lack of transparency in financial reporting. What else?
Lack of engaging shareholders.
Yes. Lack of communication with shareholders. So from the case, you can clearly see when it's come to governance, those issues are there. Right? So you can identify clearly CEO dominates the board, right? That's the first one. Second one, lack of transparency in financial reporting. Third one, lack of engagement with the shareholders, right? So those 3 can be very clearly identified. So apart from that, if you want to add more, right? Extending more, you can see that there can be a reputational problem because it's not directly being said in the context, but you can add to that because since they are not following the governance, corporate governance practices very well, so this will create a bad reputation for the organization for not conducting their operations in the proper way, right? So there can be a reputation risk. Second one, you can bring as this may lead to loss of investor confidence because they are not governing the organization in the proper way. So those are kind of additional points that you can put, like generally in a scenario like this, right? So you have 3 key points which are very direct, which you can get from here. Apart from that, you can put those things as well. there can be loss of investor confidence because at present they are not governing the organization in the proper way. So this may lead to investors having doubts whether this company is conducted in the proper manner. Secondly, you can put there can be reputational issues with regards to management of this organization. So likewise, you can bring additional points, but properly justify. But make it the you have to put directly, yeah? It is visible. Next one. Discuss the key principles of corporate governance, how they can be applied to improve the situation. Can you remember we did some principles? What are the principles of the How many were there? We started with which one, guys? Fairness. What again? Started with fairness and end with what? Integrity. Integrity. So you can bring out of that any point and justify. Right? That as far as you can justify, like you can select any few points and write down. Okay, so you can bring fairness. So mostly what you can see, but commonly what you can bring is you can bring accountability. It's a very key thing. Transparency. Because auditing issues, reporting issues, a key principle that you can bring is, in that case, transparency. Right? Transparency you can bring. So you can write, the company should provide, I will put this answer, okay? But these are the points that you have to get into your mind firstly, okay? So you can put that, you can bring as a principle transparency, and you can say that the company should provide accurate and timely information to stakeholders. TechWave can improve transparency by enhancing its financial reporting and disclosure practices. So there is a question, right? Because there is a lack of transparency. So you can bring that principle, the corporate governance principle of transparency, and say that this company needs to bring transparency into their financial reporting. That is one principle. Second one, what is the other one that you can bring? Normally, transparency issue, transparency principle you can bring. The other one is accountability. Very common principle that you try to have in corporate governance is accountability. What is accountability? Accountability means you should be answerable for the actions you have taken, right? So in this scenario, you can say that the board should hold management accountable, because management are the ones who involved in operations, right? So they are the ones who take actions. Actions monitor board last time I explained, right? So in the organization, all these actions are done by the management. So to monitor them, you bring the board, right? So always management is accountable to whom then? To the board. Board is accountable to whom? Shareholders. You understand that, right? Accountable means answerable. But management for their action, they are accountable to the board, and the board, what the task they are doing, they are answerable to the shareholders. So this accountability needs to be ensured through corporate governance. The accountability can establish corporate governance, right? Again, they should be able to answerable for the actions they have taken. So that is the second one. What is the other one that we can bring out of that list? Third one. Okay. Skepticism. Yeah, you can bring skepticism. So in the you can see that there are certain issues are happening here. So the corporate governance codes or corporate, they are asking key principles of corporate governance. So here they have to bring skepticism, because you can see that certain things are not very clear. right? CEO dominance, there is a lack of transparency. So you need to question on these things. So you can bring the skepticism principle into the context. What else? Fairness. Right? So how can you bring fairness? How do you justify fairness? How do you bring fairness into it? Fairness means what? You have to treat everyone in the similar way. That is fairness. The fairness you have to ensure that dominant shareholders, minority shareholders, everyone interest needs to be taken care of. That is what fairness means. So they are telling they are not talking engaged with the shareholders, no. So that means they may be not looking at treating them fairly, right? So in fairness, always talks about you have to ensure that all the types of shareholders' interest needs to be treated equally, right? Dominant shareholder in the pull-up, minority shareholder in the pull-up, but all of them are shareholders and everyone should be treated in similar way, right? So you can bring fairness principle as well. What else? You can bring responsibility also. Then you can bring integrity. You need to do the things in the right way, right? So out of those lists, which I have given, how many points are there? Yes, right? You can bring points and justify. But points gain what a big case relate to the points is the right? The things that you can relate directly are transparency. You can see that there is an issue. Then there is an issue in accountability, right? There is an issue in fairness, skepticism, right? So you, by reading the scenario, bring the points and justify why it is needed. And next one, what steps can the board of directors take to ensure better corporate governance and align with best practices? Just deeply corporate governance or practices. But by looking at this scenario, according to your understanding, general understanding, what are the things that they can bring? What are the things that they can bring to enhance the corporate governance in this? Things, company their prashna. First one is what you can see is CEO is dominating. Right? So that means there's no, you can see that there's no balance, so there's no independence, or there is like one party is dominating. So those things should be taken out. Right? There, the question they ask is, what are the steps that they can do to improve the governance? So the influence or dominance of the CEO needs to be managed. That is the first thing. You can't have one party dominating the board means, yeah, I don't need the decisions, right? So in order to establish good corporate governance require everyone should in the board should be independent and should be given like no one person should influence the decision making. So that needs to be taken out, right? So CEO dominance needs to be taken out. Second one, what can you see? What are the things that you can do? In a prashna take a balwam. Financial reporting problem so what can you suggest? Improve more financial disclosures. Financial disclosure. Right? Improve more financial disclosures. And second one, there is a lack of transparency in financial reporting. So the reporting process issues there. Disclosures with a reporting process pressures here. So that means you will learn with me normally for this financial reporting and auditing part, table components of corporate board governance here. There was a table. Huh? Board governance okay. First part was board. First column was board. Second column was what? Second column remuneration, right? Yeah. This one, relationship with relationship with stakeholders. And the last one was auditing, reporting, accountability and auditing. So these are the key components of board governance. So the board, you need to identify what is the board, balanced board, right? How to appoint people to the board, right? Re-election and all those board parts is coming under that column. Then the second column talks about for a board member, how you are going to remunerate, how you are going to decide the package. Because most of these corporate collapse that we saw discussed last week has happened because they were taking very huge packages. Right? Anita is shareholders like just people who are being recruited to run the business, right? These directors and all those people. So they can't just take somebody else's money and live a comfort life. Whatever you are paying should be equal to the job that they are doing. Right? Unnecessarily, they can't have big perks, big packages, and have a comfort life. Right? Good corporate collapse. Make the shareholders are salary. Economic benefits are the remuneration, big remuneration. Right? When I am talking about remuneration, I will tell you at present, the central bank, especially for finance companies, have mentioned certain limits that you can pay for a director. Right? So beyond that, you are not supposed to pay anyone. It's attractive. Normally they are telling if someone from outside come and sit in the board, they should be paid only 100,000 for one board sitting. Right? So 100,000 is peanuts, right? We come and sit in a board for 100,000 at the moment. Right? Therefore, what they do is they add some other allowances around but the maximum it's that. So the AY undue influence. Yeah, it can take an independent party board. I told you there are two types of directors. Independent executive and non-executive. The executive directors are employees of the organization being promoted to the board. Right? Yeah, director post package right? He was normally an employee in a particular stage, but now he's been promoted to the board means a board package decided. Right? Then you have the non-executive the board. For them, also you have to decide what is the amount you are going to pay. So remuneration is also a key part because that has also created so much of issues. Actually, you need to disclose remuneration you are paying to the directors in your annual report. Just come to that extent, it should be made a lot. Transparency needs to be given to that. Okay, so that is why there is a one component, whole component of that. Then relationship with the shareholders is the other key component. How far you are dealing with your shareholders? How far you are communicating? Now here you can see in this problem also they are not communicating. So that is a big issue. Shareholders' concerns need to be taken into consideration as well as they need to be communicated properly on what's happened. Okay. The last one, as I said, auditing and accounting and auditing. Make the reporting part. Auditing, accounting and auditing section. annual reporting. How they report, do their reporting, right? How their internal controls work. You have heard about internal controls, right? Organization to ensure things are properly properly work. They have controls at different stages in their processes. So these are called internal controls. So all these internal controls, all these internal audit, right? External audit, and you may have heard about audit committee. Audit committee, companies will appoint an audit committee. So that big component that you do is to ensure that you do the reporting part in the right way. Right? Because the main pillar accounting and auditing pillar to ensure that you do your accounting and reporting part in the right way. So you can see that these 4 pillars have come up mainly because many of the corporate collapse that we went through last week has happened due to one of these reasons. Board their responsibilities have not been done properly and the mix was not right or something with regards to that. Secondly, they may have taken big packages, right? Their remuneration has not been transparent, it has been too much. So that is why the second pillar has come up. Third pillar has come up. Some of the governance issues have happened because there had not been proper communication. There had not been any fairness. Right? That is why the third pillar has come. And the last pillar, which we have seen more commonly, many of the corporate collapse shows that there is a lack of proper disclosure of financial information. So to manage that aspect, the fourth column has come. Board governance. Right? Corporate governance, board governance. Can you remember I divided the corporate governance into 3 parts, right? So the first part, and which is most commonly known part, the corporate governance is board governance. Right? Risk management also part of corporate governance. On the corporate governance, how you have to manage your organization in the proper way. So the risk management will take a part. Right? So the corporate governance is a big area. So in that, board governance is the key part. Right? Corporate governance board governance board composition subcommittees, all those things are discussed under that. But you need to understand corporate governance is the umbrella term. Under that you have board governance, ethics, risk management, everything. Corporate governance. Right? So what steps that you can take? As I said, you have to look at this. You have to reduce this dominant influence of the CEO. So to reduce this dominant influence of the CEO, you may have to bring more kind of directors into the board. Independent. Yes. Independent means non-executive. Right? You need to bring more non-executive independent directors into the board to manage the influence of the CEO. Then you have to establish, you have to enhance the disclosure, financial disclosures, right? Not only financial disclosures, you have to look at how this financial reporting is done also, right? You have to disclose more, right? That is one requirement. Disclosure is not enough. That is one requirement. Other thing is that since there's a lack of transparency in financial reporting, that means the reporting process there is an issue also, right? Disclose karana pramane prashnatma nemai metana diye. Disclose a financial reporting system ekith issue ekak tiyena. Eka thamai transparency issue ekak tiyena. That means you have to ensure that the financial reporting process is done in the proper way. That is the third one, right? You should have more disclosures. Second one, and third one is you have to have more control over financial reporting process. We have altogether talked about 4 points to improve, right? reduce the CEO dominance by bringing more independent director, independent or non-executives, right? Second one is enhance more reporting. Third one, overlook the financial reporting process. One, what can you bring as the fourth one? Point එක මොකක්ද issue එක? The AC working, guys. සමේද තියෙන්නේ මොකද ළමයි? Either the one. Why is it 29? You bring it to somewhere around 26 one. Right. What can you bring by looking at that this last sentence? There have to be more connection with shareholders. Right? There has to be more connection with shareholders because you can see that there is issue over there. Right? So you can bring these 4 points as the answer for this. What steps can the board of directors can take to ensure better corporate governance? Fifth one, how can engaging with shareholders and other stakeholders contribute to the company's long-term success? Why do you need to get connected to shareholders or stakeholders? ඇයි අපි ඒගොල්ලොත් එක්ක connect වෙලා ඉන්න ඕන කියලා ඔයගොල්ලෝ හිතන්නේ? It's what they are asking. What do you think? This question was given to recap of what we did in the first class, right? Why do you think we need to get connected with these people? Shareholders connected as an organization. Money. Read that. Mama company of none. Always, when you are doing a question, you have to be that party. Right? You have to take that character that they are asking the question. Think. The method when no mokan make question eකට අනුව මම කාගේ shoes වල තියෙන්න ඕනේ. You should be in whose shoes? The company shoes, right? නැත්නම් මම director shoe එකේ ඉන්න ඕනේ. Right? Company point of view එකෙන් මම බලන්න ඕනේ. What are the benefits that I'm going to get when I'm connected with my shareholders? This one, you can build trust, isn't it? When you're connected with your shareholders, you can build trust because you're communicating, you're always telling them what is happening in the organization and you're taking their views. Most importantly is you're communicating, you're transparent. So when you communicate and when you're becoming more transparent, that will support to build trust. Right? Islam අපිට connect වෙලා ඉන්න එකෙන් ඇති කරගන්න පුළුවන් first thing is trust. Trust build because you are becoming more transparent. Connect means you are communicating with them. So that is the first one. Second one, by engaging with them, you can take their feedback all the time. Right? So by taking their feedback, you can use those feedback when you are doing operations in the organization, when you are thinking how to expand and all that, you can take their viewpoints, feedbacks. For an instance, when you are doing risk management, you will realize that when in an organization, there are 2 types of shareholders. Did I tell you this? Right? Some shareholders are there, they want constant return. Right? They have a constant return in shareholders. They don't want organization to unnecessarily expand. Right? Become expansion risky projects they want do the operation and give them a return every year. So those investors are very risk-averse investors. They don't want any unnecessary risk to be taken by the firm, organization, and they don't want constant return. There are other investors who are very much want organization to expand and grow because they don't want a constant dividend. They want a capital gain. Right? Capital gain. Okay, the is the organ. You know that if you distribute dividends, your return earnings are going to go down. Return earnings are in the dividends declare. It's about it. අපි වැඩියෙන් dividends declare කරනවා කියන්නේ අපේ return earnings අඩු වෙලා ඊට පස්සේ ප්‍රශ්න වෙන්නේ මොකද? අපේ where will the problem come? Yeah.
Working capital.
Not working capital. Working capital වල නෙවෙයි problem එක වෙන්නේ. අපේ retained earnings කියන එක that ඒකෙන් අපි profit දුන්නාම expansion වලට සල්ලි නැහැ. Right? Expansion, growth, investments. What is the සල්ලි ළමයි අපි දෙන්නේ? Working capital is also part, but working capital mostly comes with not the profit. You know the difference between cash flow and profit, right? Tamale? Huh? That's what is the difference between cash flow and profit? Profit is not your cash flow. Cash flow එක හොයන්න මොකක්ද හදන්නේ? Cash flow statement එක profit and loss එකෙන් profit එක හොයන්නේ. ඒතකොට profit එක අපේ cash book එකේ නෑ ඒක ගන්න. දන්නව නේද? එතකොට අපේ working capital management වලට අපිට ඕනේ මොකක්ද? Cash flow statement. Right? එතකොට profit එකෙන් වෙන්නේ ඒ profit එක අපි දුන්නා. If we share the profit among the shareholders as dividends, there are going to be less amount for investment and expansions. Right? Api ගොඩක් වෙලාවට shareholders and private companies වලනේ shareholders like පොඩ්ඩයි. So they don't want to share that dividends in a big way. සමහර ඒගොල්ලන් කරන්නේ ඒක තියාගෙන ඒක reinvest කරනවා. Invest කරලා expand කරන organization. හැබැයි when you have a company or a big one, you have different order of shareholders නේ. එතකොට ඉතින් consent එකක් ගන්න බෑ dividends declare කරන්න බෑ කියලා. තේරෙනවද? මොකද shareholders ගොඩක් තියෙනවා. එතකොට ඒගොල්ලන්ට declare කරන්න වෙනවා dividend එකක්. නැත්තම් shareholders ලා market එකට share එක විකුණලා market price එක drop වෙනවා. තේරෙනවනේ? අපි දුන්නේ නැත්තම් dividend එකක් මොකද වෙන්නේ කියන්නේ? they are going to sell. එතකොට එකපාරටම market එකට shares ආවම අපේ share price එක drop වෙනවා. Right? So therefore you need to understand, you need to get the feedback, you need to get the pulse of your shareholders, what they want. Right? You need to understand, are they looking for dividends? Then you have to get according to that. Are they someone who is looking for a capital gain? They don't want a return, they want this money to be invested, expand this, grow this, then we know what to be done. Share capital gain. So if your shareholders are more towards that, then you have to work accordingly. You have to expand the business, go do the new stuff, innovative, expand into new markets, new product and all that. If your shareholders need a constant return, ඒක achieve කරන්න වැඩ ටික කරගෙන යන්න. මොකද වැඩිපුර risk ගන්නවා කියන්නේ sure නෑනේ return එකක් ඊළඟ පාර දෙන්න පුළුවන් විදියට. ඒත් ඒගොල්ලෝ expect කරන්නේ constant return එක. මොකද මට දෙන්න බැරි වුණොත් company එකට ඒගොල්ලන් issue. They're going to be issue. Right? So what the point that I'm trying to stress is when you're connected with your shareholders, you can get the feedback of what they want. Right? So that feedback is important for us to run our business operation and deliver what they want. Right? අපි ඒ feedback එක දන්නේ නැත්නම් ඒගොල්ලෝ අපේ expect කරන දේක් දන්නේ නැහැ, තේරෙන්නේ නැහැ නේද? So the second point why we need to get connected to get their feedback and conduct the operations of the business accordingly. The first point was to build the trust. Second point is to get the feedback from them and accordingly conduct the business. Third point is it's good for reputation. Right? When you are connected with your shareholders and other stakeholders. It gives them the image, or it gives the image to the outsiders. You are a company which is operating really well. ඒක නිසා ඔයගොල්ලෝ connect වෙලා ඒගොල්ලන්ගේ concerns අහලා ඒගොල්ලොත් එක්ක ඉන්නේ, right? So this is something good for your reputation. So likewise, you can bring points to support this. So I will put the answer. There are other 2 points also, so you can then understand. Clear? So the first part එකෙන් තමයි මේ question එක දාන්නේ. So මේ අපි දැන් මේ point මේ questions වලින් we covered everything what we studied in the topic. Right? ඒක කතා කරපු main topics ටික මේ question එකෙන් cover වුණා. So you should be මේ වගේ mini scenarios exam එකේ තියෙනවා. Right? So you should be able to apply. Okay, right. So today's lesson, so the topic that we are going to do now is about, I told you, in corporate governance. Now, all the 3 topics that you have, guys, there is a theory part that you have to study. So make a month, make a touch kara, agency theory ගැන කතා කරා. And you remember I talked about the agency theories? So this is a little bit expansion of that, right? So when it comes to this topic, corporate governance, there are several theories which have been put forward to explain why corporate governance is important. So out of those theories, the key theory is the agency theory, right? Apart from that, stakeholder theory. Have you heard stakeholder theory? Again? Have you heard stakeholder theory? Yes. Then have you heard transaction cost economics theory? No. Transaction cost economics theory. So all these theories can be used to justify why we need to bring corporate governance practices into organization. So from that we will take agency theory and look at a little bit more on that aspect. Right? Now, first of all, this gives you the general idea of what is agency theory. Right? Have a look. A significant work of corporate governance has built up within the context of principal agent framework. It was developed by Jensen and McLean, and it was further enhanced by Pharma and Jensen. As I said, all 3 topics that you are going to study, there is a theory. Separate 3 theories are there, right? The make agency theory. When you are doing risk management, you are going to study a model called COSO model. Again, COSO model, right? Then when you right. So when it comes to ethics, which I'm not going to do with you all, done by the other lecturer, there is another theoretical model for that all. Main theory is then a gun no right? Main theory theoretically, we are justifying why corporate governance is needed. Then over that case studies practical why corporate governance was needed. Practical. Right? There were practical issues case studies or practical issues that directors reporting auditors issues. So those are practical stuff. But the practical stuff you need to understand theoretically also. We can justify why there is a need for corporate governance. So if you take this first part of these slides, generally talks about generally agency theory මොකක්ද කියන එක. Right? එතකොට මේක මේ අලුත් දෙයක් නෙවෙයි. ඔයගොල්ලෝ අහලා ඇති ඕන තරම්. එතකොට agency relationship එකක් කියලා කියන්නේ as we all know it's a contract between which one or more person principal engage with another person agent to perform some service on their behalf that involves delegating some decision making authority to the agent. So agency relationship in general means this. There can be one or more principals who engage another person as the agent to perform some services on their behalf, and that involves delegating some decision making authority. Open way to Tamil letter. Right? So sorry. So when it comes to an agent, agent is supposed to have. I'm not referring to the companies yet. The normal agent when we appoint someone, this list and the next list which shows what are the responsibilities of an agent. Right? Can you all go through that? So first thing, as an agent, you should be accountable to the principal. That means you are the person who are taking actions by using principal's thing. Right? The agent කියලා දේවල් නෑ. Agent use කරන්නේ principal ගේ දේවල්. Because he is acting on behalf of the principal. So the actions that they take on the resources of the principal, they should be answerable for those things. That is what is called answerable, right? Agent, always remember, agent uses resources of the principal. Agent does the thing by using the power of the principal. So whatever the action he has taken, then he should be answerable to the principal on that. Right? එයා කරපු දේවල් වලට question මොකක් හරි දෙයක් question කරනවා නම් එයා ආයෙත් answer කරන්න ලෑස්ති වෙන්න ඕනේ. Answerable to that. That is what is called accountability. The agent is answerable under the contract to their principal and must account for the resources of their principal and the money they have gained working on their principal's behalf. You need to understand you are using your principal's resources. You are responsible for the principal's money. Then that means you are answerable to him for the actions you have taken. Right? When he questions you, you should be answerable. The first one. Second one, fiduciary duty. That is duty of care and trust. You have to maintain trust. If you violate the trust, then there's a problem, no? Right? Third one, performance. The agent who agrees to act as an agent for a reward has a contractual obligation to perform their agreed task. If you have agreed to do certain tasks, they have to do it. An unpaid agent is not bound to carry out their agreed task. If you are someone is not paid as an agent, legal boundary legally you are not bound to conduct the activities, everything. Because you are not being paid. And if you are being paid, you have the responsibility to perform the task mainly through contractual obligations. So an agent may refuse to perform an illegal action. Perform something illegal, he can refuse to perform. Right? You need to understand if it is not within the legal context, then as an agent you can refuse to do so. Right? Though you are being recruited as the agent in a contract. Right? Then obedience. The agent must act strictly in accordance with their principal instructions, provided that these are lawful and reasonable. Even if they believe disobedience to be in their principal's best interest, they may not disobey the instructions. Right? Instructions follow karandama overhead. Then skill. As an agent, you should have the required skill and care expected from the profession. To be expected of a person in their profession. Then, personal performance. The OYAMA agent you need to perform. You can't delegate it to somebody else. Right? You are being recruited as the agent. So that means you are supposed to do the performance by yourself. That is what is called personal performance. The agent is presumably selected because of their personal qualities and owes a duty to perform their task themselves and not to delegate it to another. Right? You can't act the agent. You are the one who is responsible. You are the one the task being given because of some sort of a quality that you are having. Because I feel that person is good to be taken as my agent and I'm sure that he will perform the task that I'm expecting. So if you try to delegate it to somebody else, can you expect the same service? No, right? So as a responsibility, if you are being selected as the agent, you have to perform it by yourself. But they may delegate in few special circumstances if delegation is necessary. Such as solicitor acting for a client would be obliged to instruct a stockbroker to buy or sell listed securities on a stock exchange. The method of relationship will go on. So you have used a solicitor, right? You are the client. Client means I'm the principal, right? I have taken the service of a solicitor for something, but that solicitor has instructed the stockbroker to buy and sell securities on the stock exchange. Because that solicitor that I took the service as the agent may not have access to it or may not have the needed expertise on that to handle it. In such situation, he has given it to somebody else to do it in the best way. Then on with the relationship, right? So agent that I have taken is the solicitor because maybe he didn't have the knowledge or he didn't have the access or something. He has delegated it to someone to do the task better. Right? So in such situation, it is acceptable. But in other situation, because in this case, you are expecting more than the agent, the other person to do the task better. Right? If we can do the task better, that's fine. You can justify. But if the other person do a shitty job, what would happen? You delegate it to the agent to do it well. And if the agent delegate to somebody and he did not perform as expected, you can identify, then there is a problem in that. Right? Then you can't justify the delegation properly. But in such a situation like this, if you can justify it for the betterment of my client that I did this, then that's fine. Okay? Then no conflict of interest. The agent owes their principal duty not to put themselves in a situation where their own self-interest is given priority. Right? Always when we are acting on behalf of someone, you have to ensure that their interest needs to be given priority to be achieved. Right? agent expectations achieved. Then I need to fulfill that. By fulfilling their expectation, I should get a return compensating for that. That is how I should achieve my objective. Can you understand, right? This is always remember, you are using somebody else's money. somebody else's resources. It doesn't belong to you. So you should get a return by providing a good service to that party and make that party happy. Then that party will compensate on you, right? Not by using some other party's property for your benefit to get more benefit to yourself. That is not what is expected in agency relationship. මිනිස්සු කරන්නේ ඒකයි. වෙන කාගේවත් resources වලින් තමන්ගේ needs satisfy කරනවා. Agents වගේ problem එක ඒකයි. ඒකට they compromise what the principal wants. They are not delivering what the principal wants. They are trying to deliver what they want. Right? So that then it will lead to the issue of conflict of interest. Because we have not taken the interest of the principal. We have not taken care of their interest. We have taken care of agent's interest. That is where the problem happens. And මේ scenarios කතා කරන තාම අපි company context එකට ආවේ නැහැනේ. Company context වලට ආවම අපිට තේරෙනවා. So even the scenarios that we went last week, right? It is shareholders' money, but we have used it the way we want. The managers have used it the way they want. Okay, සමහර ලාවට their compensation, their salary is linked to the risk, the new projects that they bring. And ඒ වගේ අපේ compensation එක link කරලා තිබ්බාම මම manager නම්, right? මම human being කෙනෙක් නේ. මම manager නම් මගේ KPI එකක් නම් new projects that you have done. Without looking at the risk of these projects, I will try to bring more and more projects. Can you understand? එතකොට මේ projects හරි ගියාද වැරදුනාද කියන එක නෙමෙයි. ඒකේ ultimate impact එක යන්නේ shareholder ට. Because if you lose, you are losing his money. Right? But my compensation was not linked to any of those things. My compensation, mage KPI ekune, how many new projects did I bring? So I will try to do more and more projects without looking at the risk involved or anything of such nature, trying to add more to my salary. Right? But you need to understand that by doing these, by bringing these new projects, you are ultimately thinking of yourself, not the ultimate benefit going to the shareholders. Right? All of us who are working in the organization are agents. Right? What we have to deliver is what the owners of the organization want. Right? They are the principals. So we have to deliver that. So many of us, or most of these managerial position people, forget. Is where the agency problem happens. Right? ඒගොල්ලෝ හදන්නේ ඒගොල්ලන්ගේ package එක, ඒගොල්ලන්ගේ salary එක, ඒගොල්ලන්ගේ bonus එක ඒවා වැඩි කරගන්න. Right? ඒවා වැඩි කරන්නේ ඒගොල්ලන්ගේ කරන දේවල් වලින් අන්තිමට harm එක වෙන්නේ සමාලාවට shareholder. Because you may go and take wrong decisions because you are tempted to increase your benefits. Okay? ඔය තමයි organizational context again issue. So conflict of interest is a very big issue that you can see in many agency situations. We are going to talk about this in depth later on. Then next one is, as the agent, you have to keep the confidence. Confidence of all the information shared or confidence of all the agency information, even if the relationship ceased. You should not disclose your agent information to anybody else. Right? So that is why confidence plays a key role. Next one, you should not, as the agent, get any benefit from this particular relationship to your benefit, where you have to take only what is agreed with the principal. Principal agreement නැති වෙන benefit આવොත් සමහරවිට customers ලාගෙන් benefits එන්න පුළුවන්. Eva, it's not, it doesn't belong to you. But we know that we are humans and we will take it, right? But theoretically, the right way, you can't take any benefits other than what principal has agreed to give to you. Right? So you can see that these are the responsibilities you should have as an agent. Now we are coming to the context of organization. In organization, guys, we can clearly see 3 types of agency relationships. First one, shareholder director relationship. Samane director relationship ekata managers lawa දාන්න. Managers also working for the ultimate shareholders, no, right? So you can see that shareholder, director, we cluster both of them and we call them management. Right? Directors and managers, we call them as management. So shareholder management relationship. Apart from that, there's a shareholder auditor relationship. That is there, in that case also there is an agency relationship. The last one is director manager relationship. Because director also, right, if you take the hierarchy here, right, normally what we say is you have the shareholders, then you have the BOD, then you have the management, right? So first agency relationship is with this and these two together. This one is going to be the agent, right? This is the first relationship. Corporate governance, corporate first principal agent relationship is this. Then the other one is shareholders and auditors. So here shareholder is principal, auditor is agent. That is another kind of relationship that you can see in companies. Third one is in this bracket. Now you can take board of directors as principal and they have dedicated the work to the management. Board of directors will day-to-day operations right? Give it to management. So then these people will become agents. So there are three types of agency relationship here. Right. Read this. The first relationship. First relationship. Read this, guys. So here, guys, now when it comes to this agency theory, right? So first thing you have to understand is who is principal and who is agent. So the principal agency relationship like a you have to identify this, right? Second one, you need to identify what is the role of agent in the relationship, right? Third one, you need to understand how agent is monitored. Fourth one is how agent achieve principal objectives. We have to be very clear on these things, right? In agency relationship again, you have to know very clear, right? Who is the principal? Who is the agent? What is the role of the agent in the context being given? Then how agent is monitored, right? Last one, how agent is going to achieve the objectives of the principle. Now we make the three agency things that we do that. We look from these three four aspects. First one, it says agency is a significant issue in the company limited by share as a form of business organization because of separation of ownership of the company from the management. Now you need to understand, guys, in my slides, I have bold certain words, right? A bold karla diyana vachana are keywords which I expect you to put in your answer in whatever form you want. Right? Not මේකම ලියනවා නෙවෙයි, but a keyword එක ඔබගේ answer එකේ තියෙන්න ඕනේ. Right? Whatever way you write, but the keyword should be there. So you need to understand this agency issue has come into the context of organization, as I explained last week also, because there is a separation of who owns it and who manages it. Right? If this separation was not there, no agency problem. Right? Shareholders. And I told you, shareholders will not come and manage the organization. And they don't have expertise to manage the organization. That is why they recruit people called managers to run it. Right? So there is, as a result of that, who owns it and who manages it, there is a gap. So the owners are shareholders, which can be seen as the principal. The management of the company, which is known as the agent. So within a management, as I told you, BOD as well as the top management team, right? Although ordinary shareholders are the owners of the company to whom the board of directors is accountable, the actual powers of the shareholders tend to be restricted. Why restricted? Because all the shareholders can't just walk into the company and go through the accounts. Become company company shares accounts. Can they ask? No, they can't. Right? They can't. Company shares I can't go to the company and demand that give me your accounts, I want to go through it. You can't. You are an owner. Shares you are an owner, right? In a big company. But you have no right like that to walk in and ask to go through the accounts or review anything. Right? So because there is a separation between ownership and management, though you are the owner, your actual powers are restricted. Can you understand? Right? You can't just walk in and ask for things from the company to refer. They normally have no right to inspect the books of accounts, and their forecast of future prospects are gained from the annual report and account, stockbroker journals, and daily newspapers. Okay. So as the shareholders, they can't go and ask to refer the books, and they have to forecast things about the company by going through whatever the company published and through the stockbrokers sometimes, and even referring to journals and newspapers. My own company, but sometimes I have to get the information from those sources. And you understand, right? Mama itikari, but I don't have right to go and give you their books or sit in the board meetings as we like. Right? You can't. Therefore, these are the ways you can get information. So the third point says the day-to-day running of a company is a responsibility of the directors and the managers. Day-to-day running directors, day-to-day running is done by the management because I cluster, it comes together. Directors and the management to whom the directors delegate, not the shareholders. For these reasons, therefore, there is a potential for conflict of interest between management and the shareholders. May separation because the ownership and the management is separated, there is a high chance that conflict of interest happens. So what is this conflict of interest? So this conflict of interest is what we call agency problem. Agency is a problem. So conflict of interest can happen in two ways. First way, the agent may not act in the best interest of the principal. That is the first reason for conflict of interest. Agent, principal interest, they are not behaving. Right? That is what it says. The agent may not act in the best interest of the principal, or the agent may act only partially in best interest of the principal. So the reason why they are not acting in the best interest of the principal is because of two reasons. First one, there is a conflict in objectives between agent and the principal. Agent objectives with principal objectives with Galle. They have two different objectives. So when these two are having two different objectives, this leads to conflict. Right? I'm showing you through examples what are the things that can happen like that. Second reason why they can get conflict of interest, interests are not matched, because they have different risk appetite or different risk perceptions, different risk taking. Because of these two reasons, there is a high chance that agent may not achieve the objectives of the principal. Fair enough, right? First thing, conflict of interest happen is the agent is not acting in the best interest of the principal. So why they are not acting in the best interest? Two reasons. Because the objectives are not tallying. Second one is the risk taking. It's not matching. Right? So because of this. The second reason why conflict of interest happen is there is a problem of information asymmetry. One person, especially the agent, since he's running the organization, has more information of what is happening in the organization, and they will use that information for their benefit rather than sharing it with the principal. A second reason is conflict at the above, agency problems at the above. They are using the information for their benefit in the sense they know where the excess money is coming. They know the different ways to hide the things, right? So information they can maneuver the way they want for the agent, right? And the principal needs to depend on the information shared by the agent. So the agent will hide current information, right? So they may not disclose everything to the principal, which is wrong. Right? That is what we call information asymmetry. Information, that information they are going to use for their benefit. So in such situation also, you can get conflict of interest. The conflict of interest and right? Conflict of interest happen in two ways. First one, when the agent is not acting on behalf of the principal. When they are conflict clash, when their objective clashes, and when their risk attitudes clashes. Right? Second way, how did conflict of interest happen? Because of problem in information asymmetry. That is what it says. So we'll look examples of these things. Conflict of objectives. The example that I told you, right? Egolange compensation link more growth, more business. Then they will go for that, but you have to go for that if that gives a higher return to the shareholder principal. But they don't consider that. Their objective is to increase the profit. So they will achieve that. So when the objectives are in conflict, it will lead to agency problems. Then second one, risk tolerance. if the management remuneration relies too much on company stock and options, the managers may be willing to take too much risk to increase stock value. यानी compensation එක link වෙලා තියෙන්නේ කොච්චරද share price එක වැඩි වෙන ගානට. Right? Share price එක වැඩි වෙන ගානට තමයි risk එක. එතකොට එයා share price එක වැඩි කරන්න he may be taking overdue risks. Right? He may be taking overdue risk because it's connected to their compensation. So their risk tolerance. He has taken more risk because it's impacting his package, bonus. Right? His remuneration will increase if the share prices goes up. So to increase the share price, he has to do things. Right? So he will do things by taking more risk. More risk more return the more risk leads to more return. So he will behave in that way. When the management remuneration relies too little on company stock and option, the management may not take more risk. So the compensation risk share value share price risk too little risk for the principal. Right? So the risk tolerance whenever how their package is linked to risk factors. Right? Their package is linked to increasing share values. So they will take aggressively risks to increase the share value. Right? Too much risk taking more than what the principal expected. The opposite if the compensation is not linked to the risk factors, risk company expand that. Then they will do things less than what the shareholders expect. Right? So when risk tolerance level conflicts, this also leads to a bad situation. Right? Next one is information asymmetry. If shareholders have unequal access to information, they find it difficult to assess the true performance of agents hired to act in their best interest. Moreover, in the case of poor performance, it's difficult to vote it out. Right? As I told you, they only get what has been disclosed to them. So that means shareholders have less information than the board of directors and the management team. So that leads to issues. Right? When you take generally, some industries have high level of information asymmetry. For an instance, high-tech companies, when you take high-tech companies, right, they don't disclose information that much. It's rapidly changing. Information disclosed. So in those sectors, there is a big issue in financial reporting and becoming less transparent. So we'll take a break now and come to agency cost after that. Right? So manage agency cost means to manage those agency problems. What are the things that we can do? That come by 250 now. अगर डाउनलोड के लिए चली जाए I think often I have my The device is the one experience, so
Excuse me, madam.
Doctor.
Madam, whiteboard එකේ ලියනවා අපිට පේන්නේ නැහැ madam මේක ප්‍රශ්නේ.
Whiteboard එකේ ලොකුවට දෙයක් ගන්න ඉන්නේ නැහැ, but I'll write down one.
Because when we can see the whiteboard a little bit from the
Side.
camera, but it mirrors, madam. කියන්නේ අපිට අනිත් පැත්තට පේන්නේ. කියන්නේ mirror වෙලා තමයි පේන එකත් පේන්නේ.
Galle මම මේ පුරුදු නෑ චුට්ටක් එකයි චුට්ට දවසකට I'll write other stuff. Did you get what I taught? ගන්න පුළුවන් තේරුණාද?
මිස් කියනවා අපිට පැහැදිලි. නමුත් අර whiteboard එකේ ලියනවම madam අපිට පොඩ්ඩක් අර ඒ time එකත් එක්ක අල්ල ගන්න අමාරුයි.
Okay, I'll make sure I write on the screen.
Thank you, madam. If you use it, madam, it will be not much harder, madam.
Okay, madam, මං හිතන විදිහට desktop එකේ තියෙනවා shortcut එකක්. IT එක්කෙනාට කතා කරා නම් මේ madam ට පොඩ්ඩක්.
I'll check on that.
Okay, thank you, madam.
මල්ක චුට්ටක් එනවද මේ Make a close one and then stop everything.
Now we can see, madam. Thank you.
So I'm writing my notes on the board on this, huh?
Okay, miss. Okay, madam. Thank you.
Can you call the others? Stuff we have finished. Right? I'll give you need a message the others to come. Right. So if we continue, we identified the problems, agency problems that can happen between principal and the agent, right? So in the context, we identify conflict of interest happen because of two reasons. First one is the interest of the agent. The agent will not fulfill the interest of the principal due to two reasons. Because differences in objectives. Second one is differences in risk tolerance. The second reason why conflict of interest happen is because of information asymmetry. Then we manage the right? So to manage these agency problems, we have to take up certain initiatives. So these initiatives require us to incur a cost. ඒක නිසා තමයි මේ initiatives වලට අපි කියන්නේ agency cost කියලා. Right? To manage the agency problem, we need to take up certain actions. So these actions, when we are taking, we have to incur a cost all the time. As a result of that, we call these actions as agency cost. තේරෙනවද දැන් ඒකට agency cost කියන්නේ කියලා? මේ හැම action එකක්ම කරනවා කියන්නේ ඒකට cost එකක් involve වෙනවා. So if you look at the things that we can do, right? So the things that we can do, the first one it says to alleviate the agency problem, shareholders have to take steps to exercise control, such as attending the AGMs or ultimately becoming directors themselves. However, agency theory assumes it will be expensive and difficult to be undertaken. AGM they can vote, right? They can attend the AGM, they can vote, they can change the directors. So through that, they can manage their agency issues, right? They can appoint as a director and get involved. Right? Those are the things that as a director, what you can do, as a shareholder, what you can do to manage the directors, right? You can attend the AGM and change the directors, or you can become a director to manage the agency issues, right? As the last point said, but it is very expensive and difficult to do task. So if that is the case, what are the other ways that you can do monitoring? Right? What are the other ways you can do monitoring? There is quite a long list. Right? May agency issues nathi karanda, what are the ways that we can do to monitor our agent in the context of organizations? So that means what are the things that shareholders can do to look at how the directors are managed as their agent, how they are doing things. Right? Another list cost of studying company data and results. You can do an analysis, you can get information. Sometimes there are organizations who collect company information, right? So you can do an analysis of how the company is performing, and through that you can do monitoring of how the agents in the sense directors and managers have done their part, right? So මේ data ගන්නවා කියන එක ලේසිද? නෑ. You have to incur a cost. ඒකයි අපි කියන්නේ මේකට agency cost කියලා. Cost එකක් තියෙනවා මේ and the action monitoring action එකේම there is a cost involved. Getting the to study the company information, you have to get it from somewhere, right? You have to spend for that. You have to spend money for that. That is why it is called agency cost. Second one is purchase of expert analysis. If you are a shareholder who doesn't have enough knowledge to analyze, you can get an expert advice. So that's also you have to pay for that person. Right? So expert analysis is another way you can use to do the monitoring of how your agents have done the work. Right? Third one, external auditor. That is also one kind of a monitoring. අපි external audit කරන්නේ මේගොල්ලෝ හරියට වැඩේ කරලා තියෙනවද කියලා බලන්න නේ. කාගේ වැඩේද? මේ agents ලගේ වැඩ. Agents තමයි shareholder directors and managers. Right? So auditing is also a monitoring system, and that also includes a cost. Next one, cost of devising and enforcing directors' contracts. The other way that you can do to manage this agency problem is to develop very comprehensive contract for the directors. Right? So developing comprehensive contract also involves a cost. Cost of devising and enforcing director contracts. Then time spent attending company meetings. So if you want, you can go and attend the meetings and see how the things are being done. It's an opportunity cost there, something you are sacrificing and going there. Then cost of direct intervention into company affairs. Last one, implementing performance measurement system to monitor the managers. So these are the mechanisms that as a shareholder you can use to ensure the agency problems will not happen through proper monitoring. Right? මේවා තමයි කරන්නේ. අමාරුවෙන් කරන්න පුළුවන් දේවල් මේවා. මේ agency issues නැති කරන්න. Right? Agency issues නැති කරලා මේගොල්ලන්ව monitor කරන්න තමයි we do all these things. Right? But you can see that. So these are one set of things that you can do to monitor it. Then there are other things, especially these three can be used to monitor or align the interest of the management, top management, to the interest of the shareholders. That means top management, they day-to-day operations are. So they are the people more than the BOD. They are the people who actually knows what is happening in the organization, right? They also report to the BOD, right? BOD then reports to the shareholder. So actual run is done by the management. So my agency problems good up can make managerial issues right? They either think of themselves, they see the benefits of themselves, or they may not disclose the information. So then in that situation, agency theory says that you have to align these interests of the management with the interest of the shareholders. So to align these two interests, they're proposing other than the monitoring mechanisms we studied here. These are all monitoring mechanisms. They bring another 3 actions that you can do. Right? So these are the monitoring parts that you can do to manage the agency issues. Apart from that, to align the interest of these two parties more, you can do these 3 things. So what are these 3 things? First one, profit related or value added pay. For your managers, always as a bonus or something, give them the bonus based on the profit increased. The regular profit increase කරන්න එපා ඒකට bonus එක ගන්න. තේරෙනවද? the profit increase කරනවා කියලා shareholders ලාට හොඳයි ඒගොල්ලන්ගේ return එකක් වැඩි වෙනවා. Right? So always for their compensation, give a bonus or something which coming from value addition or increasing profit. That is one way. Profit related or economic value added pay. You are giving them a bonus, pay or bonuses related to the size of profit or economic value added. Profit එක වැඩි වුණොත් මෙච්චර percentage එකක් ඔයගොල්ලන්ගේ bonus එක හැටියට දෙනවා. Then they will work to ensure that profits are increased. So profit increase is what shareholders are also expecting. So through that you are trying to align interest of both the parties. Clear data, right? Second, ඊළඟට කරන එක මොකද්ද? මේගොල්ලන්ට shares දෙනවා. So when you allow your managers to buy the shares, they are automatically becoming shareholders of the company, right? So then they also want this company to move forward, earn more profits. So through that also you are trying to align the interest of the managers with the shareholders who are already there, right? You are making them shareholders. Read this. This might be done when a private company goes public and managers are invited to subscribe for shares in the company at an attractive offer price. Normally, make when a private company is public company, when you are transferring, you are allowing your management also to purchase certain percentage of shares. Right? But why you are doing that is you are trying to make them also shareholders, so they will have then more responsibility to operate this in the way what principal wants, normal shareholders want. Right? In a management buyout or buy-in, management buyout means the latter involves purchase of business by new managers. That is, buy-in means when new managers are buy share. Buyout means the former by existing managers. right? When existing managers buy shares, we call it buyout. When the new managers buy shares, we call it buy-in. Managers become joint owner and manager. So they become shareholders as well as they are anyway managers, right? So this dual role will try to connect the interest of the shareholders' interest with the because other party has also now become a shareholder. Executive share option. Executive share option. Have a look what that means. The executive share option. So the rewarding managers with shares happen when there is a strategic change in the business. Right? Business private public there is a big movement. But executive share option means in your existing business, for selected employees, you are offering the option to buy shares at a price in the future. In a share option scheme, selected employees are given number of share options, each of which give the shareholder the right after a certain day to subscribe for shares in the company at a fixed price. You subscribe, you buy shares in 6 months' time at this rate. At 6 months' time, the share price would fluctuate. Doesn't matter, right? You are telling this price. Now I am offering at this price, you can buy it. In 6 months' time, the near future time, not immediately. The value of an option will increase if the company is successful, its share price goes up. So you are telling the 6 months' time now. So if the firm has done well, by the 6 months' time, the share will go up. But you have offered it at a different price now. So he is going to get a profit anyway from that, right? Capital gain. Therefore, giving managers an incentive to take decisions to increase the value of the company. Actions congruent with the wider shareholders' interest. So you are telling in 6 months' time, 1 year time, you can purchase the share at this price. So you will work hard to ensure that by 1 year, the price is going more than that. Right? So that means you are trying to align your shareholders' interest with the manager. So the manager share price. So for the share price to go up, you have to perform well. The organization needs to run properly. Then only the share price goes up. Right? So then they will work hard to achieve that. Right? So these are the mechanisms which organizations can use to manage this agency problem between shareholders, BOD and the management team. Right? For a BOD and management team, we cluster as the management and the shareholders. These are my actions. But you need to understand that even with all this, still there are agency problems. That is why you need to bring corporate governance. Fair enough. May home karala, may tiyana issues tama, ඇති කරන්න බැරි වෙලා තියෙනවා. Monitoring systems දාලා තියෙනවා, මේ වගේ schemes දාලා තියෙනවා, but still things are happening. Agency issues are still there. That is why you have to bring systems and processes like corporate governance to manage the situation. Right? So mama make to justify theoretically why corporate governance is needed for organizations. Right? So I explained the reason now through agency theory. Right? So this says if the market mechanism and shareholder activities. So all these are market mechanisms. Shareholder activities. Shareholder activities, right? These are monitoring activities they can do. These are market activities that they can do. But If the market mechanisms and shareholder activities are not enough to monitor, then some form of a regulation, such as corporate governance codes, are needed to manage the agency problems. Corporate governance frameworks aim to ensure directors and managers fulfill their responsibilities as agents by requiring disclosure and suggesting they should be rewarded based on performance. So if you go through the pillars that I was talking about, it identifies how the organization board and the top management should work, right? It dictates, as inside the corporate governance 4 pillars that I put on the board a few minutes ago. This shows how they should operate in an organization. So maybe they operate to not agency problems that they can. Yeah. There are a number of corporate governance code of conduct and recommendation issued by governments and stock exchanges. Normally, government connected with stock markets when they are issuing the corporate governance code. Although the compliance voluntary, you will realize countries like ours, corporate governance code follow karane voluntary. Right? Organizations වලට මේවා rules ඇටියට දාලා නැහැ. Strict කරලා නැහැ මේවා follow කරන්න ඕනේ කියලා. It's voluntary. But through other regulations, they have made it mandatory. So the code එක අපේ voluntary. හදලා තියෙන code එක company වලට පාවිච්චි කරනවද නැද්ද කියන එක voluntary. හැබැයි Sri Lanka we have කනවා බොනවා ටිකින් දාගන්න විතරක් නෑ. මයි කතා කරන්නේ මමයි කන්න බොන්න ඕනේ. හගෙන ඉන්නවද කන්න ඕනේ. කියනවද නැහැ ආවිලා ඉන්න කසක් කරලා So in Sri Lanka, how they have made it mandatory is they have in 2007 they have brought a rule saying that if you are going to be listed in stock market, you have to follow the corporate governance code. Right? So a list කරනවා නම් අනිවාර්යයෙන්ම ඒකෙන් ඒ rule එකේ ඉන්නේ මොකෙන්ද? Stock market එකේ. BSAA එකෙන් Securities and Exchange Commission එක තමයි ඒ rule එක දෙන්නේ. Right? So they bring the rule telling that if you are going to be listed in the stock market, you have to follow the corporate governance code. Normally, corporate governance code in Sri Lanka is not compulsory. Right? List when that come, make follow voluntary. But if you are listing, it's become mandatory. Right? That's what it says. Although the compliance is voluntary, in the sense when it is not governed by law, the fear of damage to the reputation arising from governance weaknesses and threats of delisting from stock exchange rendered it difficult not to comply. Take a voluntary වෙන්න පුළුවන්. But the threat, the fear of damage to the reputation, right? You have the option whether to follow it or not. But through other mechanisms, organizations are pushed to do it, right? Reputation-wise, if you don't follow it, there will be a big ha-ho. Me company karanne nahi, right? So that creates negative reputation. Then investors will not come. So from the reputation perspective, also you are being pushed. And the other perspective is delisting. You want to go to the stock market, or if you want to operate over there, you have to follow this. So this is another mechanism which they have made it possible. There are not voluntary code through other mechanisms, they are enforcing organizations to do this. Right? So that is how agency theory connects with corporate governance. Clear later? Right? Okay. Then we are moving to the other type of agency relationship, which was what? I told you, inside BOD and management, there is an agency relationship. So that is what they explain here. Director-manager relationship. Now, all this time, what we were focusing more was on shareholder, board of directors and manager relationship. right? That part is over. Now we are focusing on director-manager relationship. As mentioned in the previous slide, the board of directors is hired by the shareholders to represent them and protect their interests, right? You are hiring, shareholders are hiring board of directors to ensure their interests are protected. Then the board hires CEO and other executives to manage the company and maximize shareholder value. But ඒගොල්ලෝ hire කරනවා management team in order to conduct the day-to-day operation, running of the organization and deliver the shareholder value. So in that context, directors are acting as principals and managers and employees are acting as agents. That is other situation. And the last one is shareholder auditor agency relationship, right? So shareholders as a monitoring process are hiring auditors. So the auditors in that context, I'm referring to the external auditors, right? So those external auditors are becoming agents because they want, the shareholders want true and fair view of how the organization management has done the work. So they hire external auditors to do that, right? So they create an agency relationship. The shareholder auditor relationship is another agency relationship that you can commonly see in companies. The shareholder are the principal, the auditors are the agents, and the audit report is the key method of communication. An agency problem with auditor is that auditor may not be independent. Right? Then අපි ගත්තොත් කලින් scenario එකේ, in this scenario, right? Director manager relationship එකේ what kind of agency problems can happen? මොන වගේ agency problems වෙන්න පුළුවන්? Kind of agency problem. You know what are agency problems? Main relationship එකේ මොන වගේ agency problems there? So what is now in this context? Who is the principal? Board. Board is the principal. Who is the agent? Management team. Then මම මේ ප්‍රශ්න හතරට උත්තර හොයන්න. Yeah. එතකොට what is the role of the agent in this context? Exactly. Manage the company, manage the operations of the company and deliver the shareholder value. That is what is expected, right? As from the board, from the management as the agent, that is what is expected, right? How agent is monitored? Any idea? In this context, agent is monitored.
Internal audit.
Exactly. Very good. Internal audit, right? You have internal control systems. Internal control systems are management. Management needs to make the internal control systems, but internal audit internal control system right? So internal controls internal audit. Right? But internal audit is not under management. You have to understand that. Internal audit is not under management. Internal audit is under whom? Audit committee. They are under audit committee. Audit committee is BOD. Right? Normally, board subcommittee audit committee. The audit committee is internal audit function. Report right? It's a quota. The internal audit function is monitoring part in managers right? So that is how. So what is as the agent, what they are supposed to achieve? How do they have to achieve the objective? They have to function. They have to undertake the tasks which is delegated to them, right, to ensure they achieve the shareholder value which is delegated to them to achieve. Right? ඒ වගේ තමයි. ඒතර මේ ඊළඟ තියෙන relationship එක ගත්තොත් shareholder auditor relationship එකේ. මෙතන who is the principal? Is the principal shareholder. Who is the agent? External auditor. Right? So what is the role of the agent? What is the role of the agent in this context? No, they have to give a true and fair view of the financial reporting system, right? Financial reporting system of the organization, right? Then how this agent, right? So the agency problem that can happen is to give that true and fair view, this auditor should be independent. And the auditor when attachment තියනවා නම් company එකත් එක්ක එයා independent නැහැ. What are the other when attachment කියන්නේ මොන වගේ දේවල්ද ගමන්? You take somebody as an external auditor. So he is supposed to, that person, that audit firm is supposed to do the auditing of our accounts and other things and say, right? They can do other services to our companies as well, which is called non-audit services. We heard this word last week. Non-audit services. What are the non-audit services? Tax filing, right? Risk management, outsourcing the accounting function.
Payroll.
You have heard the audit firms just this. They're going to say, become a client, external auditor, non-audit function, become a garage. And they maintain the independence expected as the external auditor. That they are so attached. So they are non-audit services, so they are the main client company. Right? Independence is compromised. Right? Then in that situation, there is an agency problem happen because auditor is not independent. Right? When the agency problem because of this, the auditor is not independent of the management of the companies that they audit. They become too close to the management through the non-audit or are afraid that management will not give them non-audit work. So if the same person who comes as the external auditor does the non-audit work, then there is an agency should be found. Right? Direct costs are obviously the audit fee. In addition, there will be time spent by management and employees dealing with the information and preparing information for the auditors. The amount of that, when you take auditors, you have to pay audit fee. That is the agent payment. Other than that, for this audit to conduct, organization, management, and the employee need to provide information. Otherwise, the auditors can't do it now. So that also include, apart from the audit fee, comes as an agency cost. Or a document preparation, agency cost, the audit fee apart from the audit fee. The amount of audit cost is not solely determined by the shareholder, but influenced by the professional institute which the auditor belongs and national and international government bodies. So the audit fee will be the agency cost here, right? So then that will be determined by several factors, which is the professional, the standard of the audit firm, as well as national and international, which belongs and national and international government bodies influence on setting the price, right? So this is one type of agency relationship. And finally, I have this question. I hope now you can answer to this. Very easy. They are asking using example from the RTY company, explain the key concepts of agency theory. So when you take, these are the key concepts of agency theory. Who is the principal? Who is the agent? What is the role of the agent? How is agent being monitored? How does the agent achieve the principal objective? I will give few minutes. Can you write down the answers for this from the scenario? Right? Online මේ screen එක change කරන්න. Questions ටිකට තමයි answer කරන්න ඕනේ. Scenario එකේ. Answer this. 5 minutes. I didn't ask you to talk, huh? So what is the answer to the first one? Since you guys are talking, you may have finished. So what? If you take the first one is who is the agent and who is the principal. Who is the agent and who is the principal? In the context. So we studied 3 types of agency relationship. May agency relationship එක මොන category එකද දෙන්නේ? Huh? We studied 3 types of agency relationship. So this belongs to which category? Director, manager, agency relationship. Right. So if you say so, what is the answer to the first one? Directors are the principals of this company and managers are the agents. Right? That is the answer for the first one. Because first you have to explain the agency relationship in the context. Right. Then they are asking what is the task of the agent? What is the task of the agent? You have to answer, my dear. එහෙම කියපු ගමන් මින් බලනවා නේ මොනවා බලන්නද කොලයක්වත් අතෙත් නැහැ. Next time, sir, you come and sit in the front. Annie, what are the responsibilities of the agent? What are the responsibilities? Yeah. First of all, they have to run their department, right? First, they have been assigned to do a certain task. So first thing is they have to run a department and have implement right internal control systems. First function is function run karane. Right? First function is they have to run the different departments with right internal controls. So they are employed to run their departments, establish internal controls. What else? Is there anything else? Yeah, they have to provide a performance report as well. That is the third one, right? So answer should be the senior managers are employed. I'll upload that by the board to run their departments, including establishing internal control systems and providing reports on performance of their departments. So how is the agent monitored? What is the agency cost here? What is the agency cost in the context? How is the agent being monitored? How is the monitoring being done, guys? There in the scenario. What is the agency cost? Agency cost and monitoring cost. What is the monitoring happening here? Internal audit, right? So the monitoring happens through internal audit department, where the chief internal auditor provides a separate report on how the here it says an internal audit department monitors the internal control system, reviews the senior manager's report. Then they provide a separate report confirming this, right? So the monitoring is done through the reports provided by internal audit function, right? So the monitoring of the managers or the agents is done by reviewing the reports provided by the internal audit function. එතකොට ඒගොල්ලෝ ඒක tally කරනවා අර managers හදන report එක. Right? Internal audit function එක separately report එකක් දෙනවා ඒකනේ මේ කියන්නේ. And the internal audit department monitors the internal control system and reviews the senior management reports. Then the chief internal auditor then provides a separate report to the board carried out by the internal audit department. So internal audit function, they give a report and that report is used to check the report provided by the management plus it used to monitor. අරගොල්ලෝ දීලා තියෙන එක මේගොල්ලෝ දීලා තියෙන report එකත් එක්ක tally වෙනවා. ඒවා issues තියෙනවා. That is how they do the monitoring. So they do the monitoring through reports provided by internal audit function. The last one it says how agent achieve the objectives, right? So what is they accountable for? They are accountable for running their departments properly. That is their responsibility. So the answer for the last one is the senior managers are accountable to running their departments. So they are being given the responsibility to run the departments correctly. So they give a quarterly report to the BOD now. So that report confirms how well they have operated the department. That kind of answer should come. So they are accountable to run the department properly and they are being entrusted with all the freedom to run the department correctly and they will provide the quarterly report provided by them will show the directors how well they have run the department operations. So that is the kind of answer expected. Okay, so I think that's the end of today's lesson. Here, Doganda, right? So next week, it's a very big topic. We are going to look at how corporate governance goals are developed. Right? I have already uploaded the video because I thought I can start today, but I'm glad I didn't.